Hello and welcome to Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Patakia. Hey guys, good morning. Well, a fresh new series. December already. We are talking about December already, guys. But it's a good start, right? We've seen Nifty staying on those levels at which it started. 231 points higher on the Nifty as we speak. Mid caps are outperforming 1.1% higher on that one. The advanced decline ratio comfortably in the favor of advances. 4:1. That's the ratio that we are looking at on the NSE right now. Bank Nifty is meaningfully contributing. The story today has to be the gains that we're seeing in the metal space. We'll discuss that in greater detail. PSU banking index continues to do really well. And we have all the sectoral indices in the green. So that's a great start to a new series.
And the support is coming in from the global markets. Pull up Asia this morning. Nikkei, that's the Japanese market, is up 1.8%. The Taiwanese market has surged 1.5%. Korean markets are boasting of a gain of close to about 2%. So there is very strong green across the Asian market, and that's being rubbed off in the Indian market. You know, you spoke about some of the PSU banks. Look at UCO Bank, IOB, Bank of India, Union Bank, South Indian Bank. Very, very big gains coming through in many of these individual stocks. But in fact, Hormis has now moved over to the big wall, put the spotlight on individual movers and shakers.
It's been a while since we said that the screen is looking like a wow right now, and that's what we are starting off the series with. So we'll start off with double-digit gainers in today's show. Best Agro Life, the top gainer on the small cap index today, up 12.5%. At one point was up around 17-18%, so it's cooled off slightly from the highs. The second day of gains, the biggest single-day gain since April of last year. The volumes are also the highest since February of this year, but we've had close to 5 lakh shares that have already been traded. The 20-day average is just 10,000 shares. For Best Agro Life, currently the stock has moved above its 50 DMA of 337. The next level on the upside is the 200-day moving average, which comes up to around 352. Now, the stock has been an underperformer this year, is down 44% so far, was down 25% last year as well. Igarashi Motors has made its way up into the list of gainers. It's 17% higher now on the stock. Best Agro Life cooled off. This one has moved to the highest point of the day, the biggest single day gain since September of 23. It snapped a 6-day losing streak today. It's almost 3 lakh shares that have been traded. The 20-day average is only 8,500 shares. And despite this move, the stock remains below key moving averages. Actually, now with this move, the stock has moved above its 50-day moving average, which is at 499. Now, the stock has been an underperformer so far in 2025. It's down 32%. It had gained around 40% last year. And last one on the list today is Fino Payments Bank. This one has also snapped a 6-day losing streak today, with the biggest single-day gain since April of this year. The volumes are the highest in 6 months as well. We had 40 lakh shares that have been traded on Fino Payments Bank already, and the 20-day average is only 60,000 shares. And the 200 DMA support has held out, and it has rebounded from those levels. Now, the stock is recovering some of its losses of this year, still down 7% on a year-to-date basis. Was up around about 20% in the year gone by.
Okay, all right. Take that point. Some interesting names there. Thank you so much for joining us with those details, Hormis. The other stock on our radar is Keynes Tech. It is buzzing in trade after brokerages have come out with a positive note. Sudarshan is here with more details on this one. Sudarshan, what are the brokerages making of the stock?
So brokerages have returned on Keynes Technologies after company had held analyst meet, and most of the brokerages remain positive on the stock. And the reason, if you remember, after Q2 earnings were largely in line, and the guidance for FY26 was kept almost unchanged. Now, today JP Morgan has written on that, maintains overweight call, target is 7,550 per share. It says FY26 guidance remains largely unchanged. Revenue guidance is in the range of 4,400 to 4,500 crore. Core EMS revenue guidance is in the range of 4,100 to 4,200 crore, and company is saying that it can achieve $1 billion revenue target much earlier than the earlier guidance that company had given is of FY28. And it also said that fundraise is not required, and OSAT and PCB, these are two main or important main segments, and that will become self-sufficient after first year of the operations. Nomura too believes and that Nomura too maintains the positive stance on the stock and has a buy call with a target of 8,478 per share. It says company has a focus on broad-based growth and that will aid diversification. OSAT and PSCB remains on track and receivables are expected to normalize by FY26 and company is targeting positive operating cash flow in FY26. And in H1, it has executed smart meter orders of more than rupees 450 crore and it's targeting smart meter order inflows or execution in the range of 800 to 900 crore in FY26. So overall, it's looking positive for Kaynes Technology, and you can see the stock is up more than 1%.
Indeed, and Nomura also says the stock is trading at 38 times FY28 PE. So 2 year forward, 38 times. But Sudarshan, Tata Motors passenger vehicles has relaunched Tata Sierra at an introductory price of about 11.5 lakh. I mean, what's been the feedback? What are brokerages saying?
It's a relaunch, or say it's a reborn for Tata Motors passenger vehicles. And after several days of down move that stock has been seeing, today it's up around 2%. If you take a look at the stock returns in 2025, it's been down 51%, biggest underperformer amongst all the auto names. Now, yesterday, company has launched Sierra. So basically, Nomura believes that it has the most features that Tata Motors has provided in all the SUVs. So this has the most features and the introductory price is rupees 11.49 lakhs and bookings for the same will start on December 16 and deliveries are expected from January of 2026. It will come in 3 powertrain options. Nomura maintains neutral call on the stock though and target is 395 per share. It says Sierra car carries forward the Sierra design into a modern avatar. Pricing too is very aggressive given the base variants are feature loaded as well and it has potential for the sales that it can increase the sales of total SUVs for Tata Motors passenger vehicles. And for this only, it has the potential of sales of 10,000 units per month. And it seems well positioned to benefit from consumer shift that over the last few years, you have been seeing that consumer has been shifting to the premium segment. And it could create a meaningful upside to PV growth expectation that Nomura has over FY26 to 28. Even some of the other brokerages too have written on this. And they are largely positive, especially on the base of this launch.
I asked Sudarshan after the launch when he said, "Kaisa lag raha hai?" And he said, "Acha lag raha hai, yaar." So maybe one more addition to his fleet. But Sudarshan, thank you for the Tata Motors passenger vehicles, almost 1.75% higher today. Now, speaking to CNBC TV18, Shailesh Chandra, the CEO and managing director of the company, says that they are eyeing a double-digit growth this fiscal and are expecting SUV market share to touch between 22 to 25%. Listen in.
It has been not just another launch of a car. It's an emotional moment for us because, as you know, that Sierra was the original Sierra was launched in sometime around 1991, 35 years back, and had got discontinued somewhere around 2001, 2002. So it's after literally 25 years that we were reviving this. You named the cars and you will see that there was a missing piece in the portfolio, because the way we have designed our portfolio that say once a customer buys the car for the first time, maybe a Tiago, for the whole life cycle, whole life, the customer has an option of upgrading in the same showroom, which is the Tata showroom. So you have a full continuity that we have tried to give right from Tiago to Harrier Safari. But this was the missing link, which was the mid-size SUV, which Sierra very well fits in and gives the portfolio continuity that we wanted. Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY26, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in Q2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
We take a short break here on Trading Hour. Put the spotlight on the crypto markets on the other side with Manisha Gupta. Welcome back. Shifting focus to the crypto space now. Manisha is here with more on this. Manisha.
Well, thank you for that, Hormuz. And do you know how many cryptocurrencies are there in the global markets? Well, it's not a small number. It's a big one, actually. It's 37 million cryptocurrencies, unique ones at that too, in the global markets there. And that number clearly has been increasing over the years. In 2017, that number stood at 3,000, and we saw it jump up to by September 2025 at 37 million. And come back to 2014, it was just 500 cryptocurrencies that you've had. So over the years, we've seen these cryptocurrency numbers continue to increase and increase quite strongly there. When you look at the overall numbers that are actually watched for or traded on, well, that number is quite strong. CoinGecko is the one which puts out the overall market cap for all cryptos, and they basically take in account 19,385 cryptocurrencies. CoinMarketCap takes a look at around just about 9,537 cryptocurrencies. So from all of those millions of cryptocurrencies, these are the few that actually matter, have been around, have strong utility cases, and is the reason they are always on radar there. How many of these cryptocurrencies actually are offered for trade? Well, if you look at the data that has been thrown out by Binance and Coinbase, Binance has listed just about 415 cryptocurrencies, and Coinbase lets you trade in 315 of them. Various types of cryptocurrencies on your screens right now. We have Bitcoin, altcoins, stablecoins clearly has been quite a success story in this year. And then you also have meme coins, utility coins, and governance coins as well. You would ask on why do we need so many cryptocurrencies? Well, a few reasons there. One is they have diverse uses. It can be just about a digital currency. And then the cryptocurrencies also are different platforms, different projects. And some of them are used as a currency for decentralized finance, as an NFT as well. Different cryptos for gaming, supply chain management, etc. It also is about investors seeking high returns by the creation of these projects. And every new blockchain project is going to have its native token, which is the cryptocurrency therein. Also, it's easier to just create a new smart contract instead of taking anybody else's tokens, is the reason you see every project have its own native token there. Now, not all of them stay on as well, because many of these cryptocurrencies continue to get out of the system as well. One, they could be inactive. The project may not have worked. No meaningful impact from that smart contract to the project. And then poor execution sometimes also leads to closure of this. And some of them are just about scams. Some of these are unsuccessful initial coin offerings as well. Interestingly, between 2013 and 2025, an expected 12,300 cryptocurrencies actually became defunct. Markets do believe that it only is around between 10,000 to 15,000 cryptocurrencies that actually work and add to utility cases. The rest clearly are more about just speculation.
Okay, all right. Interesting update there. Thank you so much, Manisha, for joining us as always with all the update from the crypto space. With that, we'll slip into a break. When we return, we'll discuss market technicals with Chandan Tapadia of Motilal Oswal. Welcome back. You're still tuned into Trading Hour. Well, it's a new day of December series. For first day, that is. Let's get in Sudarshan with the latest trends from the F&O space this morning. Hey, Sudarshan.
So market is higher. Nifty has reclaimed 26,100, but the major move is being seen in the broader markets. Mid-cap index is sharply up. Nifty Bank has hit record high. So you have to focus on three things. Look at the PCR, put-call ratio. It's at 1.29 versus previous day's level of 0.96. Advanced decline ratio 4:1. Volatility index is down almost 5%. So all these metrics are indicating you the positive move that we are seeing. And that is the reason we are seeing a huge put writing on majority of the options. 26,000, 26,100, 25,900. All these three put options have seen a sharp drop in the premium, and the drop is in the range of almost 60 to 70%. But in the contrary, on the call side, two options that are very healthy, 26,200 and 26,500. So it tells you that immediate resistance for Nifty is around 26,250. But if it crosses that, next resistance comes around 26,500. So support for Nifty, immediate support will be around 26,000. If you fail to hold that, next support comes around 25,850. That is also 20-day moving average. And resistance, as I told you, 26,250 and 26,500. For Nifty Bank, it has hit record high. So just I have taken the support that is around now immediate support would be around 59,000. Some of the stocks that are seeing fresh longs, Reliance Industries, it's at 52-week high and just is approaching the level of 1600. And MCX, it has crossed 10,000 rupees per share for the first time, and this also has been seeing fresh longs. Samant Capital has come out of the FNO ban and is seeing fresh longs today as well. And apart from the NCC, after a big order win from Assam government, is also seeing fresh long. One stock that is seeing fresh short is Bharti Airtel after a block deal of almost 0.6% equity.
Thank you very much for that. And as we speak, IT is also pulling its weight up. Infosys, TCS, Wipro, HCL Tech, all up between 1 to 2% and spiking up in the last couple of minutes. But let's get to Chandan Taparia, Motilal Oswal Financial Services now for a quick technical check on the markets, how he's reading it, and what are the trades he would recommend. Chandan, hi.
Hi, Dima. Thanks for having me. So talking about market, after the consolidation of last couple of days, index is all set to head towards its new lifetime high. The good part is that it could absorb the supply pressure near 26,000 and the base of the market is shifting higher. And now I believe that till it holds about 26,000 with the major support of 25,850 index can head towards 26,277 to 26,500 level. When we talk about the sector, I believe selective financials, metals, banking and capital market theme could do well, while we are also expecting some short covering trigger in IT as well. So if you look at the rollover data, rollovers were slightly lower, but there is chances for the short covering trigger because FI's long short ratio is also 15%. So with all these logic, we are expecting index to head towards 26,277 or even a new lifetime high towards 26,500. When we talk about Bank Nifty index, that has been continuously outperforming the broader market, supports are holding well, and it is heading towards its new lifetime high territory. So till it holds above 59,000, Bank Nifty has potential to rally towards 60,000 to 60,500 marks.
Okay, all right. Chandan, that is about individual indices. What about stocks? Any individual stocks that you have on your radar?
Yeah, so as mentioned, we have positive stance on capital market theme, and MCX is one of the strongest counter. We have seen build-up of long position, and it has been making higher top, higher bottom formation. In fact, data setup are quite positive, and it has conquered its 5-digit mark of 10,000. So we are expecting further rally in the counter. One can buy with support of 99.50, and this counter can head towards 10,700 marks. Second trading idea, that is buy on GMR Airport. Major trend of the counter is positive. We have seen build up of long position. In fact, the put call ratio is rising apart from rising delivery volume. So one can buy GMR Infra with support of 103, and this time it can rally towards 111. Last trading idea, that is from Capital Goods, buy on Cummins. We are witnessing a consolidation breakout of last 15-20 days. In fact, it is supporting well above its rising trend line. Even the moving average crossover with long built up are indicating the bullish trend. So one can buy Cummins with support of 4,300 and it can head towards 4,600 marks.
Boy, 10,700 on MCX. Chandan, thank you for sparing time and joining us today with your views on the index and on specific stocks as well. At the highest point of the day now is MCX, 3.5% higher on the stock. Time for the big story of the day. Metals are up and about, and it's a shining bright day for the metal names, and this is led predominantly by the commentary from the steel secretary in an exclusive interview with CNBC-TV18. Now, the secretary told us that a decision on the safeguard duty on steel is expected soon, this even as he sees supply expanding ahead of demand in the next 3 to 4 years. Listen to what he said first before we go across to Nigel.
On the safeguard duty, as you know that there is a process which was conducted by DGTR, and on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6-7 November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years. Which is under consideration with the government, so we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have relaxed, suspended the QCO for a year, and we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, that's the word coming in from the Steel Secretary. But Nigel is joining us too. Nigel, what are the other triggers for the industry? And also, what did you make of the Steel Secchi comments?
Well, the big question is why are metal stocks up? There are two big factors, right, at play today. Expectations of Fed rate cuts, well, they have moved up in comparison to the past week. And fresh commentary that came in from the Steel Secretary, who spoke to us here at CNBC-TV18 exclusively yesterday. First, let's address what the Steel Secretary said, right, with regard to the protection measures. Remember, this provisional safeguard duty expired on November 6th, which means, as of now, there's no safeguard duty in place. But the Secretary assured everyone that the government decision on reinstating the safeguard duty is expected rather soon. So it's giving hope out there. That's actually a bit of a delay, but it's likely to come about. That's the hope that the street is clinging on to. He added that adjustments in the BIS norms as well as the quality controls, well, they are aimed at balancing the interest of both the steel producers as well as consumers as well. So he clarified on that protectionist stand that the government has. But you'll be asking me, why is the safeguard duty important right now? Few factors. Point number one, China's output is down. We all know that. Year to date, it's down. But exports still remain high, and Chinese exports are continuing at around 10 million tons on a monthly basis. That's a worry, because elevated exports means more Chinese steel in the global markets. That's what will put pressure on prices. Second point is domestic prices, well, they are now at par with imported steel. But if you get that safeguard duty at around 12%, then it makes domestic steel far more competitive, as it makes the domestic steel price 12% cheaper than that imports that will come in from China, and 8 to 9% cheaper on those imports that are coming in from Japan as well as from Korea. A safeguard duty would protect margins, support domestic pricing at a time when the global steel pricing on the whole is rather cheap. And point number three is large new steel capacities, they are coming online in India, which could create higher supply in the near term, and export opportunities, well, they have been narrowing. And with EU's carbon border adjustment mechanism, which is known as CBAM, that is likely to increase the compliance cost as well as reduce competitiveness in Europe. This in turn will add pressure on the industry to ensure that domestic market remains viable, strengthening the case actually for a safeguard duty to come in place. And finally, the Steel Secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward, and steel pricing, which is suppressed right now, he's expecting it to stabilize in 2026. So put everything together, the Fed likely to cut rates, Steel Secretary giving hope that there are duties that could possibly come about rather soon. So on the back of that hope, we have the metal index that's flying away.
Thank you very much for that. Earlier today, we also chatted with Vikash Singh, Vice President at ICICI Securities, and all these points that Nigel was talking about. Listen into what he had to say.
If we don't count safeguard duty, then there's not much difference. But assuming if the provisional safeguard duty would have continued, then you are 12% cheaper versus Chinese and 9 to 10% cheaper versus Japanese and Korea. So that's why I said we have already given away most of the safeguard benefits over the last couple of months. And currently, if safeguard doesn't come, then the Chinese would come at par, and Japanese, Korea would put further pressure of 1,500 to 2,000 rupees on the price.
Get into a break. On the other side, we'll discuss market fundamentals. Rakesh Vyas from Quest Investment Advisors joins in on the other side.
Welcome back. Continuing our conversation on the markets, we are being joined by Rakesh Vyas from Quest Investment Advisors. Rakesh, good morning. Thank you for joining in. After this brief lull that we saw in the markets over the last couple of days, they're back towards making that dash towards the record high. Do you believe that there are triggers in place to take the markets higher from here, or there are some underlying concerns as well?
Yeah, hi, good morning, and thanks for having me here. No, I think if you look at it, the large part of this rally, which we expect to continue going forward, will probably be led by rebound in the earning growth trajectory that as we see. And I think a lot of the impetus action that's been taken by both the central government as well as the RBI is expected to drive a lot of growth in terms of consumption thereof. And also in terms of lending and credit growth, all of that would probably translate into much better earning growth as we move into calendar year 26. And I think as markets are forward looking, the confidence that market gets around normalization of this strong earning growth over next 4 to 6 quarters is what will continue to drive the market higher. And also, given that markets today are in fair range in terms of their average multiples, we can actually expect market returns in line with the earning growth as we see forward. So I'm pretty hopeful that market will probably start to see much more upside from here on.
Rakesh, wanted to talk about one of your top holdings, that's Vishal Mega Mart. Now, just yesterday, a colleague was saying that how Vishal Mega Mart is promoted by, the private equity firm Kedara Capital, and they've been, through the IPO, the offer for sale, and then later, they've been bringing down their holding, and now it looks like Kedara, which is a 54% holding in Vishal Mega Mart, may look to do another block deal and sell an additional, I think, 13-15%. So now their holding would go sub 50%. I mean, how does that change the dynamics, the fundamentals, the lack of control that the PE will have? I mean, would that worry you, this additional supply, and the fact the management control is now below 50% holding?
Great question, Rima. And I think as a market, we need to become slightly more mature in terms of these private equity divestment that will continue to come through. So if you look at most of the new age companies that have got listed, many of them are private equity owned or backed. But over time, one also have to realize that these funds actually have a limited life, and therefore we will continue to see exits thereof. You still have a lot of platform players which are non-promoter backed, but still doing well. For example, we have our largest holding in Eternal for almost 2 years now, where there is actually in terms of stake, there is no large promoter left, right? But that business is still doing very well. It's very well professionally managed. So I think we'll have to come to a point where you have to recognize that some of these large companies that have got listed in the equity markets now will be mostly non-promoter led, professionally run. And I think in that context, the management of Vishal has done exceptionally good job since they have acquired this business. They continue to expand rapidly, even in a tough environment when SSSG growth was difficult to come by over last 4 to 6 quarters. They have been able to do a very good job of delivering double-digit SSSG. So, of course, supply pressure will remain in many of these companies, but one has to look beyond that and look at the fundamentals of business. And I think we still remain very, very constructive on some of those names. Even when, as you highlighted, we could continue to see intermittent supplies coming from private equity or promoters in general.
Okay, so that's about Vishal Mega Mart. You also have holding in Trent Limited, Rakesh. We've seen a big fall in that particular name. There were valuation concerns as well. Growth was slowing down. What makes you positive on this? Do you think that interest that we saw from shareholders in that massive rally could come back?
So I think you are right. The growth slowdown has been for real. And that's been the challenge in the urban consumption space to a large extent. Also, what has accentuated two things, which is much higher store expansion that Trent has done towards the end of last fiscal, and they still needs to become profitable at store level because it takes some time, and therefore it is reflecting in some sort of lower earning growth as well. But post that large expansion, they have actually moderated their growth plans already. So I think margins will probably to improve better from here on. And also, as I was highlighting, we remain fairly bullish on consumer discretionary as a space. And given that a lot of this tax incentives that have come into the hands of consumer will start to reflect into better consumption growth, and Trent probably is the market leader in terms of value fashion, and they should be a reasonably good beneficiary out there, given that they have very strong network of stores and will continue to see growth thereof. I think as the growth rate comes back, the re-rating will follow. So we remain fairly constructive on this name so far. If we see a material slowdown in growth sustainably going forward, I think that's when we will probably take a measured call. But we are fairly convinced that over the next 4 quarters, we will see strong rebounding growth.
Indeed, the street gets used to 35-40% growth and then starts to panic when the growth goes down to 15 to 18%. But Rakesh, very interesting holding in your portfolio is the PSU Bank Bs. You're having PSU Bank ETFs here, so you're betting on the entire space. Now, the stocks have run up considerably, but there is a chatter of the smaller banks being merged into larger ones, the exercise being underway. Do you still believe that even after the run-up, these PSU banks have value in them, considering that they have been beaten down for far too long?
No, you are right, Armaz. I think stocks have done very well, but you also have to take into account that PSU banks have been able to withhold their market share to a large extent over last 4 to 5 years. They actually lost a lot of market share on the asset side pre-COVID. But given very strong liquidity that they have and the brand network, they have been able to bounce back very strongly and therefore able to manage market share. And if you look at the valuation metrics that exist today between private and PSU, there is no major difference between the growth rates or the asset quality per se. And therefore, there is always a rationale for some of this valuation gap to narrow unless we see any of the challenges either in terms of asset quality coming in or they lagging in terms of growth. But I don't see that being on horizon for next 4 to 6 quarters. So I think they still remain a reasonable bet. There are specific companies within the space where with the change of management, there could be increased focus on higher growth rates, etc. But I think overall as a space, we remain positive. But you are right. We'll again have to be very cognizant of the fact that there could be a consolidation in the space. And what is the contours of that consolidation will determine our next course of action. But till that point of time, we remain very, very positive.
All right. Thank you so much for joining in and taking us through your holdings and the analysis on markets as well. Time for a short break. We'll get you more on the markets on the other side.
Welcome back. Shriram Finance has been in focus. Earlier today, we had a chat with the management and we quizzed them because there have been a lot of news reports, buzz, that perhaps some investment is coming into the company. So we asked them about it. Listen in to what they had to say.
There will be many discussions going on. I cannot be talking about it. So there will be always some interested party who are, as you are rightly putting it, India is attracting a lot of capital, both for the debt and the equity. Everyone is seeing India as a large economy growing well. So that is where the interest levels are very high. And that is likely to continue. We are at 20% plus on CRAR. So we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital. So I can't disclose beyond that. The rural market is actually, the demand is much faster than the urban right now. And I believe with the government now have cleared some of the infrastructure project in the last cabinet meeting, there will be a much bigger thrust on the infrastructure part of it, and that will help the growth coming back in the urban area also. So both an urban and rural put together, the demand should be much higher. So we believe the growth can be much higher than the guidance given. We gave the guidance of 15%. We should be growing at around 17-18% if everything falls in line.
That was the management of Shriram Finance. We spoke about MCX earlier in the day, or earlier in the show actually. It is now above 10,000 rupees. And a day earlier, in an exclusive conversation with CNBC-TV18, MCX CEO Praveena Rai said that she expects to build MCX's capacity to process 10 billion orders in a day. Listen into what she had to say.
What I heard is, you have to be ready for 10x, right? And I think that was really a rallying cry.
A ringing thing, huh?
Yeah, and I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single shot jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months as a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
All right, that's the word coming in from MCX. We'll take a short break now. When we come back, we'll get you more on the market moves on the other side.
Welcome back. It's time to call curtains on this edition of Trading Hour, but not before showing you that the markets are at the highest point of the day. The Nifty now at 250 points higher, the mid-cap index to 650 points higher, as is the Nifty Bank. Sonal, Rima and I take your leave on this note. Halftime report on the other side. Thank you so much for watching.